It seems like we got a rally pretty much on time, right? Kind of in the spot and at the moment you might have expected it at the 10% correction level. What were you looking for in terms of the character of the rally and where does it go from here?
So exactly right. So I will categorize this market as being in a high-risk oversold condition. So I don't think it's a garden variety type of oversold. So what do we need to see? We actually need to see the market prove itself at this point. Friday was a step in the right direction with a 90% up day, so we had a good breath, surge off of that. But what we really need to see is that the market needs to recover at least 2/3 of this decline. It's classic technical analysis. You need to retrace that point. And for the non-technical geeks like myself, that's around that 50-day moving average. So we need to see breadth confirmation and follow through to the upside, particularly around that 50-day moving average.
So the 2/3 of the losses, so yeah, you're looking at you want to get back like 7% or something like that. And what would you be looking for in terms of either confirmation or concerns? I mean, a lot of folks going into the low are saying, look, credit markets, they've noticed the volatility, but they haven't really sent up any alarms.
So to triangulate, I guess, the call, right, how we're going to make things a little bit better. So I like to look at the cross assets quite closely. I don't know where you stand on Bitcoin. I think you've talked about it. You don't know if you like it all that much, but like
as a signal,
it's interesting. So Bitcoin needs to stabilize and go up. It needs to start outperforming gold, right? So that's a metric that I follow. And gold's been ripping. I still think it gets to around 3,100. So gold needs to stabilize. Bitcoin needs to start to rally. That's one. Credit has started to push up. That needs to kind of stop what it's doing. CD experts have broken out of a bit of a base. It does pretend that a trend reversal is happening there. That needs to really chill out. The next would be just in general, just interest rates need to calm down. In particular, the 3-month to 10-year curve needs to stop inverting, needs to stop rolling over. That's exactly when the momentum factor peaked in January. It's the same time when that curve peaked. So I would like to see that to start pushing up higher.
Do you have a call as to whether that stampede out of the momentum names is through? Is it mostly cleaned up? Can we know?
So the way that I'm viewing the momentum unwind is that since it's been highly correlated with the market itself, they're one and the same. So going into this year, I did anticipate the momentum factor to unwind and in turn force me to be a little bit more cautious than I otherwise would be on the S&P given how they're together. Now, we had this deep oversold condition in the market, and we have a very deep oversold in terms of momentum or a very overbought condition in terms of low beta outperformance. So again, the condition is there for that to bottom. My sense is that if we're not falling into a recessionary type of bear market, which the odds have increased, but I don't think it's overwhelming yet, that factor is very close to bottoming as well, and I'm actually going to be interested in buying those names that took us down on the way up.
That's interesting because, it's during this phase, a lot of folks who for a long time have been saying we should rotate into value, we should rotate into mid caps or the average stock or cyclicals, whatever it is outside of big cap tech, for example, are saying now we've done it. It's kind of the market's gotten rebalanced and we can go from here. On the other hand, late in a bull market, it's not that common to sort of switch leadership.
I agree, and it's very risk off. So I think you got to be careful what you ask for. A lot of folks are looking for the average stock to outperform this year, or even small caps to outperform. But historically, when they outperform on a relative basis, we're in a correction or a bear market, and that's generally how bull markets end. It's a catch down of the mega caps, while the rest of the market has already been beaten up, go down to a lesser degree.
Right.
So we got to be careful with that analogy. And value, getting better, that's completely a defensive rotation here at this point. I'm not in the camp that value is going to be a long-term winner. It's still very much a growth index.
Sure. So this rally has plenty to prove, but you're sort of sticking with your ultimate upside target?
Yeah, I haven't changed my upside target. Still think 6,600. The evidence hasn't been overwhelmingly enough for me to drop that. But I do think the market needs to go through a period of basing and maybe even put in the classic double bottom or whatever, right? You kind of rally, come back down. You need a magic bullet. And my worry here is twofold. One is that everyone's looking for the V bottom. Yeah. We probably won't get it. That's the exception to the rule. And number two is folks are still reacting to the news flow. Markets bottom when they stop ignoring bad news. It was good that the market stabilized when we haven't heard any tariff headlines. But how about when we get a tariff headline that's negative, the market goes, I don't care about that anymore. We're not there yet. So that's going to take some time. So when you break your heart, what helps? Time heals a broken heart, and same with the market correction.